Hey everybody, so this is going to be a pretty fun video, and this is going to cover part 3 of my income statement series. Now in this video, I'm going to talk about stock-based compensation and how it can be a little bit tricky sometimes. So the company that we're going to look at is called Palantir Technologies. Now this was a very popular stock in 2021, and Cathie Wood was just pumping the living daylights out of this one. So let's just go right over to their income statement. So I'm going to start with the table of contents. Now right here it says condensed consolidated statements of operations. That is the same thing as the income statement. Now one thing I always like to pay attention to is in the headers, pay attention to this. It says in thousands except per share amounts. So for example, if we're looking at this number right here, we add 3 zeros to that. So this is actually $477.88 million. So pay attention to this right here. I have it highlighted. Loss from operations. So basically, if your gross profit is less than your total operating expense, you're going to end up with a loss. So that's what happened right here. So we have a loss of $62.19 million. Now, keep in mind that it says loss from operations. So this is everything that is related to operations. Everything underneath this, you know, the interest income, interest expense, other income and expenses, this is not related to the company's core operations. So this line item right here, this is very important. And right here, it says that we lost $62 million. But did we actually lose $62 million? And you're going to say, well, yeah, it says so right here. This company is absolute garbage. But, you know, these companies, they have to follow certain set of rules when they are basically coming up with these income statements. So this rule that they have to follow, it's called GAAP. And that stands for Generally Accepted Accounting Principles. Now, under GAAP, they have this thing where you have to report expenses such as stock-based compensation on the income statement. So we don't necessarily see this line item called stock-based compensation, but it's nested in many different sectors. So it might go into sales and marketing. It might go into research and development. It might go into general and administrative. It might go into all three of these. So stock-based compensation is actually nested in these line items. We don't necessarily see it, but it is nested in there. So let's think about what stock-based compensation actually is. So stock-based compensation is basically rewarding employees with stock. So let's say that I paid you $100,000 and $80,000 is cash, $20,000 is stock. Did that $20,000 of stock cost me anything as a company? Well, it didn't necessarily cost me cash. And that's because I'm basically issuing stock. So the people who are actually paying for this stock-based compensation are the investors, because what's happening is that I am diluting the shares outstanding. That is what is going on. I am diluting the shares outstanding when I am doing stock-based compensation. I am not spending cash when I am doing this. So companies, they like to do this reconciliation where they add back in the stock-based compensation to show you a different operating loss or operating income. And we're going to talk about this. So let's go over to page 24. And let's read this little excerpt right here. So it says non-GAAP reconciliations. So we exclude stock-based compensation, which is a non-cash expense. And here's the reason why they do this. They say the information to investors and others in understanding and examining and evaluating our operation results in the same manner as our management team. So what they're saying right here is, hey, you know what? We want you to see the same things that our management team is seeing. And to see this properly, we need to exclude the stock-based compensation. So they go ahead and they do that for us in the next page. So here in this next page, they have this header. It's called Adjusted Income from Operations. So it says the following table provides a reconciliation of adjusted income from operations, which excludes stock-based compensation, and related employer payroll taxes for the 3 and 9 months ended September 30th, 2022 and 2021. And these numbers are in thousands. So right here, we got our loss from operations. They took this straight from the income statement. And from this, they added the stock-based compensation, which was $140 million. And they also added the employer payroll taxes related to the stock-based compensation. This was $3 million. So when we add these two items back in, the company actually made $81.25 million from operations. Now keep in mind, this is from operations. So if we scroll back to page 4, this number should actually be positive. But keep in mind, we do have all these other line items that affect the bottom line. So the core operations actually yielded positive cash because, like I said, that stock-based compensation was not a cash expense. That was paid for by investors through dilution. And we can see that. We can see that right here. So look right here. I'm going to highlight this. This is 2022 diluted shares outstanding. This is 2021 diluted shares outstanding. So the amount of shares outstanding increased. So this was an expense, not to the company, but to the shareholders. So I hope you guys enjoyed this video and definitely stay tuned for part 4.